Investing Basics, Valuations. Hi, I'm Ian Goldie, and today's lesson is part of my multi-series for helping you get smarter about finances and investing. In 5 minutes, my goal is to quickly educate you on a subject and then provide additional information for those wanting more detailed knowledge. The end result from watching this series is that you will be moving towards the path of financial self-sufficiency and can turn your dreams into goals. Today we're talking value and how humans judge how much something is worth. Why is this 1962 Ferrari 250 GTO worth $48 million, or the equivalent of 4 million minimum wage hours? Same question for this $300 million de Kooning painting, an athlete's salary, or sparkly rocks and shiny metal. Sit back, enjoy, and absorb another episode of Finance in 5, Valuations. Humans have always valued things differently, and it's often based on these three factors: supply, demand, and perception. Holland in the 1700s had a tulip mania, where a single bulb was once worth an entire house. But it wasn't some magic bulb that produced an endless supply of food. Nope, it was a flower. We have always valued stuff. Our ancestors valued seashells, animal skins, pigments, and of course, delicious spices. Let's start with the perception of value, because humans will react based on perception. And you don't have to look any farther than the luxury market, where a handbag could sell for $50,000. The makers of these luxury goods often limit production to create a demand for their product. They create allure, a type of perception. Allure is also the brand name of a high-priced fragrance from Chanel. But if these manufacturers produce too many items, then this oversupply drives down the price as more people can purchase. You hear me, Supreme, Beanie Babies, Ferrari, and other limited suppliers? The irony is all this limitation often leads to the market being flooded with fakes. The perception of this type of luxury buyer is an important factor when they are considering this purchase. Their perceived value is in the uniqueness. Saffron, it's a delicious spice. It's derived from the stigma of the crocus flower, and it takes 75,000, that's right, 75,000 hand-picked flowers to make a single pound of the finished spice. This is a tremendous amount of human effort and labor that's dedicated to growing and harvesting saffron. Certainly more work than salt extraction. So this extra effort should equate to a higher priced spice, and it does. Because good saffron could be worth $5,000 a pound, and sea salt, well, it's around 10 bucks. But what if only a few people like the taste of saffron? Then there would be little demand, and nobody would really care how many flour it takes to add spice to rice and other foods. Understanding value will help drive many of your investing decisions and will help you become more successful for identifying opportunities. Someone can ask almost any price for anything, and it only becomes worth that price if it gets sold. Whether another person will buy a similar item at the same price is a function of the marketplace, where buyers and sellers meet. For some valuations, it's on Wall Street, and for others, it might be on eBay. In the 1980s, there was a fad where people paid 20 bucks for the pet rock. The inventor sold millions of these gag gifts. A rock worth 5 cents, put in a box worth 10 cents, that sold for 20 bucks. Crazy, stupid, doesn't make any sense. Until it does. Let's make it simple and say this pet rock company was a public stock, and you had a decision to make about buying this company as an investment. Well, you as an investor, you're trying to establish the merits of what products this company offers and what value you're willing to pay. In your analysis, you would probably observe that, well, anybody could duplicate the pet rock concept, so you might not believe in the long-term potential or value of their business model. Don't laugh too hard over the pet rock, because we live in the age of perception when cryptocurrencies are being created faster than Dunkin' can make donuts. How much to pay for a stock depends on the type of stock. When Amazon was starting, Jeff Bezos said a frequent question being asked him by potential investors: what is the internet? We've come a long way since then, but today Amazon is a logistics machine and has evolved from a seller of books to a seller of everything. Amazon historically has always been a very expensive stock to buy in terms of its price, or its price to earnings ratio, PE. Why would I buy a stock trading for 75 times earnings? Well, this basic question is often what separates value versus growth style investing. The value investor will often look at what a company has achieved, and a growth investor is thinking about the future and what this company could potentially achieve. Investor examples, Warren Buffett of Berkshire Hathaway would probably be considered a great value investor, and Masayoshi Son from SoftBank would be a growth investor. If you continue your education with our Part 2 expanded section of this video, then I will show you many examples of valuations for stocks and other investments so you can become a better investor. There's another type of value investing, and it's called SRI, Socially Responsible Investing. In this style, the investor is looking for companies that have a social charter aligned to their personal values. Examples of somebody's personal values might be applied for avoiding investments in companies whose business is in making petroleum, alcohol, gambling, guns, or cigarettes. It's called SRI, Socially Responsible Investing. Now, value is a word often associated with bargain. And that is a narrow aspect of this term because, well, value is often in the eye of the beholder. In 1991, I personally owned 2 of these 1986 Fleer Michael Jordan rookie cards, having paid $150 each. I sold them both a short time later for $300 each. At the time of the purchase, friends thought I was crazy spending that much money on a piece of printed cardboard. But today, that card sells for around $15,000 or more. So the value is not in the printed cardboard, but the bet on holding onto this card for a long time, hoping that Michael Jordan would be one of the greatest athletes of all time, and of course, there'd still be a robust market for sports collectibles like trading cards. Of course, for every Jordan rookie card, there are multiple stories of high-end value that was never realized, and speculators lost money. To conclude our 5-minute overview on valuation, remember, when you are allocating capital, you are investing based on what something is worth in the marketplace. Invest in yourself by helping us create more videos, by subscribing, liking, and commenting. Pushing a button is a lot easier than pushing a pile of bricks. So click those buttons today